Good afternoon, everybody. Thank you so much for joining us. I want to welcome everyone, our guests who are here in the room and everyone who is watching on the live webcast. We are tremendously excited to talk about the very important issue of diversity in global finance. We have some terrific panelists that I will introduce momentarily. Before I bring up our first speaker, I want to put our audience members on the spot. So research has shown that diversity in leadership leads to much better decision making. And I just want to ask the room, take a little poll, how many of you have ever been managed or had a manager who is a woman? That is wonderful. I'm so excited to hear that. What about a show of hands of how many people have hired a minority or has worked alongside a minority? Terrific, we're doing well already. I'm so excited. Well, I'd like to invite our very first speaker, Peter Lankes. He is Vice President of the Economics and Private Sector at the IFC. Mr. Lankes is from Germany and has previously served as the Managing Director of Corporate Strategy at the EBRD. Before that, he was at the IMF. Mr. Lankes.
Thank you very much. And I have an easy task. I just have to welcome our speakers here today. So good afternoon, everyone. And let's extend a very warm welcome on behalf of the World Bank Group and the IMF to our guests and panelists from the public and the private sectors here today, including Rock Creek Group, the Official Monetary and Financial Institutions Forum, OMFIF. I don't think anybody knows the extended version of this.
No, thank you for reminding me.
The Central Bank of Malaysia, and of course, colleagues here from the IMF and the World Bank Group. This event provides an exciting opportunity to champion change and to learn how we can address stubborn gender gaps, particularly those in financial leadership. Now, research suggests, and that's what we're going to hear about, we just heard about it already, that diversity at board and management levels can lead to improved decision-making of teams. And that means boosting innovation, productivity, and financial stability. That's actually a fact that was not recognized until, I was not aware of this until not long ago. And now we see study after study coming in that actually demonstrates this very, very concretely. At the same time, women are still very significantly underrepresented at all levels of the global financial system. In central banks globally, only 8% of governors are women. In emerging markets, women account for 11% of senior investment professionals in private equity firms. And I think in advanced markets, it's only 10%. And if we take China out of the emerging market figure, it comes down to 8%. In commercial banks, women account for less than 2% of CEOs and less than 20% of executive board members. We know that achieving better gender outcomes and improving business performance are not mutually exclusive. In fact, it's the opposite. And today, there are more data available to map both the scale and the precipitating factors of gender gaps than ever before, and more solutions for how to close them. Therefore, our discussion today is so important. And I'm excited to hear the IMF's latest findings on the business case for women in financial institution leadership, from OMFIF on their latest report on gender diversity in central banks, in pension funds, sovereign wealth funds, from Governor Ms. Yunus on how she assesses the inclusion of women in central banks. These findings are timely and help to bridge the gender gaps. IFC has been working with the private sector for decades to advance gender equality, and this is anchored in a strong business rationale and in client demand for solutions to advance gender equality. I'm happy to share with you the latest findings on gender diversity in private equity that we launched just last month in March, supported by the Government of Canada and in collaboration with Rock Creek and with the consulting firm Oliver Wyman. That report, called Moving Toward Gender Balance in Private Equity and Venture Capital, That report explores the link between financial returns and gender diversity, the lack of women in the industry, and the steps needed to achieve gender balance. The study draws on gender diversity and performance data from more than 700 funds and 500 portfolio companies, and I think it was the first of its kind. It confirms that when private equity and venture capital funds have gender-balanced senior investment teams, they tend to generate 10 to 20% higher returns compared with funds that have a majority of male or of female leaders. So it's the balance that matters. And I just want to say 10 to 20% return is a huge difference. So in a world particularly of very low yields, generally speaking, on financial assets, 10 to 20%, which might represent 1 to 2% percentage points, is a very large number. And companies that have gender diverse leaderships also outperform their less diverse peers by up to 25%. With these figures in mind, let us turn the conversation to our speakers, who will discuss the gaps in diversity in financial leadership and provide us with their insights and perspectives on how best to close them. We can't afford to forego progress, because countries with high gender gaps also have high income inequality. And as an institution striving to reduce absolute poverty and sharing prosperity, closing these gaps is critical for us. I'm now delighted to introduce David Lipton, who is the first managing director of the IMF, for his opening remarks.
Lots of papers. Thank you very much. It's a pleasure to be here today, and I want to thank everyone else for coming. I know this is a very busy day during a very busy week, so I'm glad that everyone can join us today for the seminar on gender diversity, dividends, and finance. It was very important for me to be able to come here to contribute to this discussion of what I think is a quite important topic. Gender in finance has macroeconomic, moral, and ethical implications extending across national borders, cultural chasms, and class divides. It affects women all over the world, from executives in boardrooms to women who seek education, access to financial services, and employment opportunities. Let me offer a few statistics that I think gives a glimpse of the problem that we face with access to financial services. Of the 1.7 billion people unbanked globally, nearly 1 billion of them are women. Lower access to bank credit robs women of opportunities to educate their children, to start businesses, or to tide over hard times. And across the world, fewer than 20% of bank and supervisory board members are women. And I'm sorry to say the IMF is no exception. On our executive board of 24 chairs, we have only 2 women, and while I'm pleased to say that we look forward to welcoming a third in a few weeks, we really should do much better. It's interesting to note that many low and middle income countries actually do better than advanced economies in having women in these leadership positions. And it will not surprise you when I report, especially since the prior speaker just said it, only 2% of bank CEOs worldwide are women. Now, I think there is by now considerable evidence of what this inequality means, what it adds up to. Recent IMF research shows that increasing financial inclusion of both women and men lifts economic growth. That research also shows that having more women in leadership positions leads to greater financial stability, lower levels of non-performing loans, and higher profits. Those are pretty impressive results. Banks with a higher share of women on their boards were more stable in 2008, the year of the global financial crisis. One reason for this performance, I think, is clear. Greater diversity means more diverse views, which helps avoid groupthink, and that helps lead to better decision-making. So why don't more financial institutions put more women in these top positions? Here, too, I don't think the the answer, the explanation is going to surprise you. Women continue to face conscious and unconscious bias, cultural, religious, or just the propensity of men to hire people who are like themselves. In addition, studies have found that women are held to a higher standard of performance, with women of color facing even bigger obstacles. Now, given all these challenges, it may be that women who persevere tend to be among the most talented and skilled executives to make it to the top. Of course, I have the privilege of working with Managing Director Christine Lagarde, and I liaise very closely also with the World Bank CEO, Kristalina Georgieva, so I can attest to this. And I'll tell you that I was at the IMF early in my career in the 1980s, and after several missions in Latin America and Africa, I noticed that the women that I was meeting in central banks and finance ministries were the most capable. And I must admit it took me a while to realize that the reason for that was they were being held back from promotions to other positions for which they were eminently qualified. There's one more dimension to this issue, an ugly dimension, but that ought to be spoken about, and that's harassment and violence against women. At the economic level, it's very costly in terms of health and services, reduced productivity, and lost opportunities. At the organizational level, sexual harassment cuts to the very soul of an institution. And that's a lesson we learned the hard way in the case of our former managing director. And at the personal level, it's just a terribly sad fact of everyday life for an awful lot of people. Fortunately, women have forced this issue into the open, where it should be, through the Me Too movement. And I just want to say, I speak for everyone at the fund when I say we must confront sexual harassment and stop it. Now, with all of that in mind, I found it additionally disheartening to read recently, it was actually reported widely in January at the time of the American Economic Association about a survey that that organization had done, and found that a shockingly large number of women economists reported being victims of sexual assault, not harassment, assault. This is criminal behavior that that they were reporting on. In addition, nearly half of the women economists said that they avoid speaking at conferences for fear of harassment or disrespectful treatment. This is unethical behavior. Finally, the survey reported that 70% felt that male colleagues' work was taken more seriously than their own, something that really must end. Many young women aspire to join our institutions when they finish graduate school, but the behavior that they face during their studies and during their early careers drives too many away from our field. That drains our intellectual capital. So one can, and I do applaud the AEA for putting in place sanctions against harassment, and I hope that they'll really follow up on this subject and that economists will take a stand. Now, as you know, at both the bank and the fund, our chief economists are women. At the fund, we've almost reached our 2020 goal of 30% of management positions filled by women, which is almost a tripling of the ratio we had 10 years ago. I'm proud of this progress. I know our managing director is proud of this progress, and I think it will genuinely help make the world a better place. So in conclusion, let me leave you with one last thought. As we work to empower women in the global economy, as we strive to make room for more women in the boardroom, let's not forget that the fight for equality and dignity should begin right here where we live and work. Thank you for your attention. I really look forward. I think this is a great seminar you have ahead of you because of the busyness of the work today. I won't be able to stay, but I wish you a great discussion. Thanks.
Thank you so much, David Lipton. It was really, really nice and inspiring to hear just some of the negative trends just to be acknowledged, I think is sort of the first step toward a better outlook for where we're headed. And my excitement about the great panel that we have, I forgot to introduce myself. I'm Saleha Mohsen. I cover the Treasury Department here in DC for Bloomberg News. So I'm so excited to have everyone come join us. If you're following on Twitter, we are at #DiversityInFinance. And without further ado, let's invite our panelists. One interesting fact that I learned today was that only 14% of global central bank governors are women. And we are very fortunate to have someone here with us today, Ms. Noor Shamsia Yunus. If you could please join us on stage. She is the governor of Bank Negara in Malaysia, and before this, she worked at the International Monetary Fund. We also have with us Ms. Afsana Beschloss. She is the CEO and founder of Rock Creek here in Washington. She previously was managing director and partner at the Carlyle Group, and previously has held positions at the World Bank, Shell International, and JP Morgan. And I'm very excited to read earlier that she was telling me that she was recognized as the American banker's most powerful women in banking, which was very... We also have with us David Marsh. He is the chairman of OMFIF. He is also senior advisor to the asset management company Sodedek. He is from Germany. And not from Germany, sorry, that was Mr. Lankes.
My wife is from Germany.
Your wife is from Germany, sorry about that. I am excited to share that he is a former journalist, which is great to have someone like me on stage. He went on to write 6 books about Europe and Brexit. We're very excited to hear from you. There's microphones on that. So I would like to kick off the discussion with Ms. Beschloss. You just recently published a report about moving toward gender balance in private equity and emerging markets. Can you share a little bit about that report with us, please?
Absolutely. Very nice to be here, and thank you for doing this. We did this study jointly with IFC, and colleagues at the IFC did a lot of the heavy lifting, as did our team and Oliver Wyman. And some of the most interesting points that came out. First of all, this, to my knowledge, is the largest study looking at the issue of gender diversity in private equity globally, not just in emerging markets. But I have not seen a similar study in the US looking at the role of senior women in investments in private equity and venture. So I think that was a really important thing that especially the World Bank Group and IFC and our colleagues, were spearheads of. So number one, largest study. Number two, what it found out was that, in fact, there are more women in emerging markets in private equity and venture than in the developed world, particularly in the US and Europe. So that was a very big finding, and we can talk about that in greater detail. Number three, it found that despite the fact that it's larger, it's still quite a small number, and that number is really about 11%. So the share of women in senior positions in investments in private equity and venture is 11%. Number four, and we heard that earlier, is that the returns of gender balanced teams, and I like to emphasize gender balanced, is about 20% more than non-gender balanced teams. And I think that was a really big deal. I think the part that I found quite sad, to be honest, is that the study found that 75% of the GPs that run investment firms said that they were not really hearing from the LPs, that LPs were stressing that when they allocated capital to the private equity firms. So LPs, when they're in conferences, in meetings, make a lot of very nice sort of talk and noise, I should say, on the role of women, and they sort of say that it does matter, but when they actually allocate money to the private equity and venture firms, they do not push that in a real way. So I think that is one of also the most important findings of this report.
So there is clearly a lot of challenges ahead. The data is moving in the right direction, and it's hard, you're at a certain age and you're wondering, how long is it going to take? Is it really a whole generation that it's going to take for this to change? Can you share a little bit about what are some of the concrete examples of what has worked in improving this kind of diversity?
I think what works is really three things. One is for private equity and venture firms to actually hire women and see how it works. I happen to have been 12th partner at Carlyle Group here in Washington. And I actually, to tell you the truth, I never felt uncomfortable. I felt very comfortable being a woman in a private equity firm. So I know it can get done. At the same time, a number of sort of the private equity firms that we talk to, but also a very good friend of mine who runs one of the 3 largest private equity firms, when I asked him why there are not more women in his firm, he said, women do not travel. Now, the women in this room will find this quite shocking. The women that I work with at the World Bank and IMF and, will find this very shocking because we don't just travel to London and Paris and Geneva, which most of these people do, but we travel in all kinds of places and we stay several weeks, regardless of family situations. So I think there is sort of a mismatch of information. So I think, how do we make sure that people get the information that women actually do travel and are working around the clock? And as you can see with the central bank governor here, and have very successful careers. So I think that's the second thing. The third thing is that the firms are hiring diversity officers. And I think what we should say is, instead of hiring diversity officers, by the way, hire diversity of officers, of course, but also in addition, please hire women and have the LPs have some sort of measurement, as you said, and monitor that. I think that will be really, really helpful. Last is, I think, very important is internships. Give more internships to diverse groups, all kinds of diverse groups. And again, everybody is looking for the one person who went to Harvard and, that's where the big banks and the big private equity firms will hire from. Hire people who did not necessarily go to those, or bring them in high school and help them get a chance.
That's very interesting. Thank you for sharing that. It's amazing to think that someone would think women don't travel. I think there are women from everywhere in this room and at the IMF meetings this week. So data is important, clearly. OMFIF publishes annually information from central banks, pension funds, sovereign wealth funds. David Marsh, can you share some of the data that you've presented in your annual report this year?
Yes, we have widened this now in the last few years. We did start off purely with central banks, and it was actually an attempt to provide some mathematical explanation for why there were so few women in central banks. We were very much driven by the idea that Janet Yellen was probably going to get the post at the Fed. I was always supporting her, not because she's a woman, I just thought she would be better than Larry Summers, and I think she probably was. And so that was, if you like, the impetus to begin with. And then we widened it slowly towards the sovereign funds and the public pension funds, which we see as all part of one fraternity. This year we brought in a little bit more comparability with the private sector. I'm very happy that our friends from Barings, which is an American group, but it could have been a British or German group, we're very non-selective in our choice of partners. They provided a little bit more granularity when it came to the comparability with the private sector. It shows actually, though, some good signs, but I think on the whole rather disheartening. One point I would actually emphasize is the lack of women at the top levels in some areas of sovereign funds. These sovereign funds are supposed to be investing in groups which are going to be bringing good returns, and many of these companies themselves are not very diverse in the senior leadership. So how do you expect them to really carry out this essential diversity of their approach? There's very few really top-notch countries in, say, the top 50 GDP with a woman at the helm. And the 14 countries that we identified as having women as central bankers, and of course we're very pleased that we have Noor Shamjia here who exemplifies this. On the whole, they are of rather small countries. And with Janet leaving, and also with one or two other defections, shall we say, from the ranks, we've just had the sole central bank governor of one of the EMU countries, Christella Georgia, who's just left the Central Bank of Cyprus. There's just no woman at the helm of a member country of the Economic and Monetary Union. There's one lady on the board of the ECB. So at the very top notch of central banks, it's actually gone backwards over the last few years. There's been a lot of central banks that have made a big effort regarding deputy governors. We've noticed that, and we've given due honour. There seems to be a bit of a gap between getting to the deputy governor post and then going for the final lap. Maybe there'll be some changes in that. It's a big political hot potato, I can tell you, in my country, in the UK, but also watch out for some real sparks to fly when it comes to the leadership of the ECB, because whoever it is, and it's bound to be a man, I can tell you that for nothing. That's free information. There will be some changes on the board. There'll be some changes in the board to follow, and the exact diversity composition of the 6-person board of the ECB will be a big debating point in European Parliament. So I could go on, but those are some of the findings. In that nicely produced yellow book there, some really interesting statistics. Please do take it to bed with you this evening. It's very good reading.
I'd love to hear from Noor Shamsia. It is clear that there's not enough women, not very many women, in leading roles at central banks around the world. Why do you think that is?
It could be because of self-selection. They opt not to take that position. I myself, when I went up the ranks, there were certain points in time when I did tell my bosses that I don't want to get promoted. So it could be because, some women make a conscious choice that they would like to have greater work-life balance and not, go up all the way up. So that is something that we should not dismiss. So it's a matter of preference. And I think in emerging Asia, especially, one of the biggest challenge is, caregiving is predominantly family-based. And these caregiving services are disproportionately done by the women. And, and only 3% of the caregiving services are done by men. So so we also need to provide the supporting infrastructure for women to be able to cope with these demands that their families place on them. So like in Bank Negara Malaysia, surprisingly, in terms of all the levels, it's about balance. At senior management, we have women constituting 40%, 47%, and men 53%. And at all levels, it's about balance. And it's not because we have a very specific policy to say that women should be first, but what we created was an environment where people are treated, so women are empowered to be able then to see, okay, what kind of career that I would like. And we also invested a lot in giving them the support. Like I said, caregiving is a very important responsibility that women would need to discharge. And so what we did was, in the bank, we built a childcare center that can take on about 400 children. So that was one of the biggest childcare center in the country. And that helped because then the women were able to juggle, and then they are able then to take full opportunities given by the bank. So what we did was, like I said, it was not so much of a conscious decision that, women must come first, but we created an environment where women are able to take advantage of the opportunities.
That's a very good point. I mean, what we're talking about is a cultural shift, which clearly happened in what you're talking about with the childcare center. We're talking about if we want women to be able to travel, spouses, partners also have to step up and take their share of the responsibilities inside the home. And companies also have to acknowledge that children exist, people have families, they have elderly people to take care of, and we need to address that. Can you tell us a little bit about your journey making it to the level where you're at, and why are you not one of those women who decided I don't want the promotion? Why did you want the promotion?
Actually, I didn't want the promotion. I mean, like I said, the bank had a very open environment. So, I was lucky. I had very good mentors, and my mentors were both men and women. And also had a great support system. My family was extremely supportive. So this is one of the things that enabled me to progress in the bank. And having an open environment, open bosses that will nurture and challenge you is a very important part of my career, my journey. And yes, the hesitancy of taking on a higher position also stems from the fact that what David said. There's always when you go up, there's always that perception as to whether you will be subjected to higher standards. And it's only when you see that your bosses being supportive and not subjecting you to higher standards is something that gives you confidence that you are able to do it. So having great mentors, great peers that also provide you the support is a very important criteria. And this is something that I think what women leaders have. The empathy that the women leaders have is much more, and we try to create a much more open environment, a much more nurturing environment, so that those who are able to take advantage of the opportunities are able to progress.
Absolutely. Well, we have some terrific panelists here, so I'd love to be able to open it up for questions. If anyone has a question, please stand up. We have a microphone, I believe, somewhere. Yes, please. Thank you.
To go all the way down. Can you hear me maybe without the microphone? Or do you want me? Okay. Because
we have a live webcast audience.
Microphone
as well.
it is, yeah,
Yes,
sure.
Thank you.
Hi, I'm Silvia Pavoni from The Banker magazine. So it's interesting to hear about data that shows correlation between gender balanced teams, for example, outperforming non-balanced teams. But again, this shows correlation rather than causality. So is there, and I've yet to find a study that proves that having more women in a team actually leads to better results because of their presence, rather than perhaps a combination of factors that end up attracting women to that specific team. Does anyone have an answer or can point me to the right place where to find that kind of research? And is it possible to prove causality?
Yeah, sure.
I was going to say, I hope you don't mind this, but why is it that women have to do better? I think a lot of the studies have been oriented towards how, women in this 5% of women did better or worse. Basically, all we're saying is women are 50% of the population, plus or minus one. And if you have them, for example, why is it that in Asia, women have been so successful in private equity and venture and in central banks? And I worked in the energy sector and worked with some of the smartest women, in fact, in Malaysia and neighboring countries who actually ran the energy sector in Malaysia. Why is that? I think basically what all you're saying is choose from the population and you're going to do well. And consumer goods are probably one of the fastest growing sectors in Asia. And again, you have 50% of the population. If you don't have them included in the decision-making process, I think you have a problem. Last but not least, I think, why does finance sector matter so much? Huge decisions are being made in central banks. Huge decisions are being made. Let's say at Rock Creek, we allocate, for a firm that is not Blackstone or BlackRock, we are allocating already 400 million to firms that have been started or run by women firms, women-initiated firms. And they're doing great. In fact, they're some of our best performers, and we see it in the day-to-day. We keep indices of women investment managers. Our indices show that they're better or the same. So, we can go and look at more data, but I think it is basically common life that women are part of the decision-making and they better make the decision.
I agree, as many other women and many other people do, but yet we keep on talking about this and things aren't maybe changing as fast as we would want to. So would research and data that points to causality help? And can we get there?
David?
Could I simply say that you can, as I'm sure you can get statistics to prove almost anything, can't you? And I wouldn't place too much on it. I think what women should do, they should go out and tell stories. Sometimes men are much better at telling stories about themselves, about what they've done. Also have women self-confident enough also to talk about things that have gone wrong as well. I think that could be very helpful. The importance of role models cannot be overestimated. This is why clearly having a female managing director at the fund is extremely good. They don't always have to be shining examples of success. They can be women who've surmounted some difficulties and got over some troubles, who've maybe got a fractured or difficult home life, and they managed to do this work-life balance. Go out and tell stories. Men are much better at lying, perhaps, than women, and maybe that's one of the reasons. Not telling women to go out and lie, but go out and tell something positive about yourself. And I think that will do any great deal better than any number of McKinsey-authored statistics about causality and correlation, which I wouldn't really believe. It's about quality, not quantity.
David, I would love to hear from you how you have directly impacted women at OMFIF.
Well, we do have a certain number of rather bossy women at OMFIF. A couple of them sitting here, Danai and Puma at the back. They're uncharacteristically sitting at the back. But basically, you have to deal with everybody with a certain amount of respect.
Was about to say that women are not.
We've got a hell of a lot of really bossy and difficult men as well. I can tell you that. I really don't want to go down that path. No, but you're right. The point is, women have to have opinions, and they have to be sharp and focused, and you have to respect people. And we don't have a different rule for men and women, of course not. That would be silly. But all these statistics about 50% and all that kind of stuff, it's quite clear that when really sharp-minded people, talented individuals come in through the door, we have to be totally blind to whether they're men and women. And I think we are. And we've got some very good role models, and we're trying to do better, I think, on our board. That is a little bit undiverse. But it would be equally bad if we had too many women. We can't discriminate in any way against men either. We've got to have this diversity. And in our scorecard of banks, I think there's one particular central bank, am I right tonight, it's got too many women, and that got a bad mark, didn't it? Because we have to have gender diversity in all its facets. And the other thing, I suppose, is that we need diversity in other backgrounds as well. It's not just gender, is it? It's other things too.
Well, unfortunately, you stepped right in it. Women do deal with this very often, that we are described as bossy or having sharp elbows or, well, there's the B word, if you're too aggressive or too vocal. And, that's one of the challenges as a woman, that you want how to raise your voice in a way that you are not described in a little bit of a pejorative manner.
Sorry, if I could just say, I don't want to dominate it by being bossy up here, but I think women are not bossy enough.
Well done, thank you. Another question, please, here in the front.
Thank you for the great opportunity to address the audience. My name is Lucrèce Dossou, and I am a young graduate student at Georgetown. And I want to address the audience directly, if I may, to show how gender diversity is an issue and how it could be addressed. So my question is, how many people here are with IFC? Can you please just raise your hand? Okay, great, awesome. How many people here are with IFC and are a woman? Awesome. How many people here are with IFC, is a woman, and is a minority woman? Minority, let's just say, look like me. So African woman. So I see 4. How many people is African with IFC and is African Francophone? 1, okay. So I think what I'm trying to prove right here is the challenge for a woman like me to get into finance, and is how we're being recruited at the bottom. I'm having great issue finding women that are Francophone, that are educated like I am, that are ambitious, and that just want to get into the financial sector. My question now is, what do you do about it? Thank you. Oh, and I'm also a candidate for the financial analyst program at IFC. Good. Anyone that can help, I'm here for that. Thank you so much.
A Afsana, please.
I was just going to say, these internships really do matter. And what we're finding is that women often don't know these internships exist. So for some reason, men seem to be doing better research on finding the internships. But then once they do apply, they also don't necessarily get the positions. So it's not just the IFC, but it's the same thing in the private sector. It's the same thing at the World Bank, across the board. And I think those are things where you need to work harder, but you're not going to change the industry. And I think that's why, if there are people in this audience who are very important investors with the private sector, it's really important, in the studies and in allocating money to actually really push people to hire the most talented people. So I think you need both, but you probably are at a better situation today than probably a lot of us who started our careers, 20, 30 years ago. But that doesn't mean it's good. It's still pretty bad.
Mm-hmm. Absolutely. We had a question here from the woman in green.
Okay, let her finish and then we'll get you.
Good afternoon, ladies and gentlemen. My name is Rosemary Seguero. I'm a president of a company called Segueros International Group. We focus on small private financing. My company was the first company and the only company I can say wrote a missing middle to IFC World Bank, which means money that can be used for small farmers and small and medium businesses, because I come from Africa, and anything you could hear about Africa is microfinance. So I told Robert Zoellick, no, microfinance is not for business. Microfinance is for women to sit down, eat for hand and mouth. So I'm coming up with a concept that can help women to do actual business. Here is one lady, wonderful lady who makes women in Africa what they sell, products, goods. Here she is. We connect. So how do we? Especially me, I wrote the concept. I wanted to make a financial institution that can support the missing people that want to develop, to grow, not women to sit on the floor and sell stuff and to go and cook for husband and come and sleep. No, we want women to be, as I say, travel, go to China, enjoy, go and sit in a restaurant, and just feel good. We are women in money. So don't pull women back to sit here. So how do I work with you to make myself travel with money, not only traveling and enjoying myself? I want to make those women local, also be proud of them, not to sit on the floor and say I'm giving microfinance. So I don't deal with microfinance. I want a missing middle concept I wrote, especially if IFC is here. Give me my money that I ask to make women proud, farmers and anybody to be proud. So when I'm walking like this. And women are also enjoying. That's what we want. That's financial leadership and inclusion. So I want to work with you all and just be like you and make money and the women to make money. Thank you. So how do I make it with you?
Thank you. Noor, can we turn to you for this one? Any response to her solicitation for some ideas?
Come on, David. You said that's how women should be.
I can help out.
Henrietta.
So this is a very lively discussion. My name is Henrietta Coburn. I lead IFC's work around gender equality. And actually we partnered just with WeConnect International to do exactly that, to move actually women not just into microfinance, but really across all asset classes. And that's why we put out a report focused on private equity and venture capital, because we've been hearing for too long, women means microfinance. And we are totally saying, no, women means economic opportunity across all asset classes. But importantly, and maybe that's something to share with the audience, is that obviously finance alone is not sufficient, because we do need the linkage into the markets. And so the World Bank Group, you might have heard that, has taken quite a bold step talking about markets. And for the first time, we looked at our own spend on procurement. And it's public knowledge, so I'm not saying terribly horrible things, but we only spend about 4% from women-owned business, which is dismal. But the main point is that for the first time, we've sex disaggregated our data, and we then made a commitment to doubling that, which is way not enough, right? But it's at least the step in the right direction. And I think we need to bring finance, and today the conversation, I want to bring it back to that. Finance is what we're talking about, but finance alone is not sufficient. We need to couple that with markets. And I would also go as far to say that capital is not enough, but we need to bring in insurance and financial protection, because we have seen that only loans is not resolving the piece of the puzzle. So I don't want to manipulate and make it too easy for David to escape to these questions, but I just thought I'd step in because the question was really focused on the IFC as well. But back to the audience and for more really punchy questions. So brace yourself.
Yes.
Learning from some of the women that are here, actually, because part of what you have to do as a woman or as a minority is to speak for yourself. You are your own best advocate. So share with everybody that, hey, with your boss or when you're applying for a job, hey, I did X, Y, and Z. Don't be modest in those interviews. But please, another question we have, yes.
Yes, my name is Juliet Adams, and my question is to the panelists. Why are men so terrified of women leadership? Where could I find men that are not terrified who can be mentor and sponsors? And let me tell you a quick story. I'm originally from Guyana, South America, and I have a friend who had the opportunity to become the governor of the Bank of Guyana. That's many decades ago. And she told me this story personally. The men in position, in high position and government position, got her in a corner and disenfranchised her from becoming the governor. That position was guaranteed, almost guaranteed for her. She studied here in the US, and she did not take it up because of the things that they told her. So it's not always that the women are not, do not want the position in their heart, but the men are able to turn their minds of these women against taking those positions. So again, my question is, why are men so terrified of women financial leadership, and where could I find men that are not that terrified that can assist me in my career journey? Thank you.
David.
I would reject the idea that there's a lot of men who are afraid of female leadership. I really would. As I said before, I think you do have to be gender blind about all this. I think you want people who are independent, who are sovereign, who speak their mind, and know what they're talking about. And I think if you pass all those opportunities and tick all those scorecards, I don't think it does make a difference if you're a woman or a man. And I also do think that those financial companies that do have demonstrably women in the leadership or in close to the very top CEO position, Julie is about to say something, she's a good exemplar of that, I think they'll A, do better in attracting clients, and B, they'll do better at keeping the clients as well. I do think there's an element of continuity about female stewardship, which is longer term, frankly.
If we could also just address directly her question, what to do if you are in a situation where men are afraid or are intimidating you?
Oh, sorry. I think there's two parts to it. One is what you can do about yourself, which is not to be intimidated. So I think that's rule one with men or women or anybody at the workplace. So, one of the rules after I left the World Bank and I started Rock Creek was that one of the rules we have is nobody can talk down to anybody. That's it's very simple. It's a cultural rule. And we have got rid of people when they did that. But I think many workplaces do not necessarily have that. And unless you speak up for yourself, you're not going to get that. But you might also have to change workplaces because you're not going to, be able to impact every workplace. But I think we're in the right direction. But it's really important. And, Governor Noor Shamsa did mention what was really important, which was having mentors. So working in places where there are men and women, because we can go the negative direction or go the positive direction. One is to spend all your energy fighting. The other is to find the right people and go work with them. So it's not just the job or the name of the job, it is who are you working with. And I think for men or women, that is incredibly important. Work with decent people who have a good culture.
It's also important to build allies, right? If you're not fortunate enough to work somewhere where there is a appointed diversity coordinator, one of my favorite things to do is when there's women who are new to the office or minorities, just to chat with them, ask them what it's like for their experience, offer help, ask for help, so that when you're in that moment and something has gone wrong, you have people to call on. The woman in the back, please.
Juliet Monaco. I'm a managing director running our public sector business at Citigroup, and so I'm coming with a private sector experience. So I'd have to say 37 years of banking that I've been involved, every mentor I've ever had was a man. And so I never really found that challenge of men being intimidated and not wanting a woman to succeed. I've been involved in women's initiatives and looking at this topic probably for the last 20-something years, and we'll still find a challenge. And the challenge, I think, what I really heard today is about gender balance. How do we culturally shift to get to gender balance? Because we now can say, we feel really great about the fact that our analyst class and our associates class are 50% women in our corporate investment banking group. That was something that didn't exist even 5 or 10 years ago. But we only have 10% managing directors, right? And how do you get to that next gap in our higher level? And it really comes down to me, what I feel is that it comes down to what to do when women hit 30 and start having children. And how do we make that cultural shift that men are equal parents and that men will take turns being the one that doesn't get to go on the business trip or has to leave at 6. And so my daughter is at Georgetown University right now in law school, and Ruth Bader Ginsburg came and spoke, and one of the girls stood up in the class and asked her, what was the single most important aspect of why you've been so successful in your career? And she said, the single most important aspect was I had a husband who believed that my career was important as his. And so I really do think that that is the cultural shift we have to make. And I am starting to see companies that are tracking how many men are taking paternity leave. Until we, and you look at the societies where it's been mandated in the Nordic countries, more women in senior positions than any other country, because men share the child rearing 50-50. So it's not about whether you should stay home with your kids, not stay home. We all agree raising the next generation of good citizens is important, but we've got to culturally shift, and corporations and the private sector and the public sector can help move society to believing that men are more than just sperm donors. They're supposed to be 50% of the child rearing. And that's when women, I think, will achieve equality in the workplace.
We have time for one or two more over here, and then we'll come back.
So I just want to respond to one of the questions that was on, don't just show me correlations. And so I just want to point to the second study, which is in your pamphlet. So that's, I've co-authored that study. And I'll tell you, that study, by the way, is not about correlations. It's very much a very rigorous econometric study, the one that shows that having more balanced both supervisory and as well as banks leads to greater financial stability. And I just want to tell you something behind that. So this work would never have been done at the IMF if we didn't have our managing director fully supporting us. So that's point one. That's absolutely point one. A lot of people say, why are you working on gender? It's because there's a business case. It's a business case. That's what we want to focus on. And even though we have the managing director right there, right from the start, I led the team. I said, I want men in my team. I don't want just women doing this work. So we were a balanced group, 4 men and 4 women. So that was not trivial, but I got there. And when we found this study, which we didn't know, this is what we are going to find. Remember, this is genuine research trying to find, is it true, is it not true? When we found this, I had some of my male colleagues saying, Ratna, we can't present this. And I said, why not? I said, you guys have done the work. I mean, all of us together. He says, but this is very revolutionary. And I said, and so what? And if that's what it is, we got to show it. We have to be true to the research. The rigor through which we had to go through, the scrutiny inside the institution, even after we sent it to other departments, and they said, it took us 2 years to get this paper out. And I was saying, why are we having to rerun these things, more stringent quality control than other papers that come out? But you know what? I'm very happy that happened, because we feel more secure about our results, that we went through that scrutiny. So I just want to say that, A, I think we have to be out there. And my team didn't thank me because I was this great leader who was doing a great intellectual leadership on the study. They thanked me for being with them and fighting through all the obstacles we faced right up until the top, until we got the paper out. So I think we just have to persevere too. We have to believe. There'll be lots of questions, but you do need very strong leaders at the top. That's critical. That's all I want to say.
Thank you very much. We have time for one more. I promise it over here.
Thanks. And a question that puzzles me with the data that we have. As economists, as private sector operators, we believe that choices are rational. We believe that the private sector, that markets are coming to solutions that kind of make sense. Now we have data that tell us that that's not true. In fact, that the choices that LPs are making are not just wrong, but they're stupid. So how do we explain that the profit motive, that the information that we have, that just simply the driving forces of the market and of these investment decisions, that they don't work in this case?
I think some of it is history, because these private markets that we studied together, private equity and hedge funds and venture, really have been around a long time in the US. So it started in a certain way. So like every other business, there is sort of, it's hard to break into. And I think that's why also the study found that Asia is so different. In Asia, private equity and venture are newer businesses. So if you're a woman, it is easier to start your own company. The other thing that the study found is that that those firms in Asia were also, both women and gender balanced firms, were investing more in firms and companies that were started by women. So I think it is, when you're starting from scratch and you're leapfrogging, it is easier. So in fact, emerging markets are ahead of developed markets, because just like infrastructure in the US is old and we're not investing in it, just like the railways, we're have slow railways when the Chinese and the other Asian countries are having fast railways, and the French, of course, and many others. But it seems that this is not different. And financial sector was formed in this country, and that's the reason that, for example, US and Europe have been ahead, is because of the financial sector. But if these changes don't get made, I think, like you said, if the payment systems in the US do not change, if women do not have a bigger role in financial sector, we're going to be far behind Asia, and Asia is making huge strides.
Could I also just say, I'm sure it will change, Hans-Peter. I am absolutely sure that those statistics will actually get better, and there will be more women, particularly in private equity. This point that Julie was making, I mean, surely private equity companies on the whole can actually bring in some relatively liberal and advanced social policies regarding the employment of women and the ability to give them a fair crack of the whip. I think private equity should be leading this. I'm sure if we do these figures in 5 years, that there'll be an improvement.
Well, unfortunately, our time is up. I love that we have had such a great conversation. That means the outlook has to be improving step by step. We can continue the conversation at #DiversityInFinance. I want to thank our panelists for their time and our audience for the excellent conversation. Thank you so much.